Hey Chicago, welcome to another weekly market update. We'll be covering the week ending March 18th, discussing mortgage rates and housing affordability, so stay tuned. Welcome to another local market update with Rick Batista. Welcome. Spring is upon us. Weather is breaking and we're seeing some more sunshine after some rainy days here recently. So thank you so much for taking the time to watch this video and keep up to date with the local market. As always, let's start off with a fun fact here. I'm going to be sharing some insights with you as well right after. Fun facts, market time. More than a decade of underbuilding has resulted in a shortage of 6.5 million single-family homes as new home construction continues to lag population growth. According to a new report from Realtor.com, 15.6 million new households were formed between 2012 and 2022, while only 9.03 million new single-family homes were completed. However, the report acknowledges that if multifamily starts are included, which represented 35% of all housing starts since 2022, the current supply deficit falls to 2.3 million homes. So there's certainly no doubt that we need more properties out there. We need more properties for sale in general, properties that are a little bit more turnkey, or at least places that haven't been neglected so much over the years by the current owner, and or homes that are priced fairly considering their current condition. So sellers, please be reasonable when pricing. Make sure you're talking with your broker. Ask them to be honest with you. A lot of times people may be pressured. Brokers are professionals, but we're human as well. And sometimes people just want that business, and they may agree with a price that isn't reasonable, but definitely a price that you're hoping to get for the property. We are always willing to take on new business, but we like to have those honest conversations up front with you so there's no surprises later on. And I can't stress that enough. If you've been watching some of our videos the last few weeks, hitting the home at the right price is absolutely the most beneficial thing for you to do. Time and time again, that has been proven, especially in the market that we've seen in the past year. So I wanted to share a little bit more information with you, taking a look at a few slides here. I think it was last week or the week before, we talked about bad news being good news. And that started off with the banks in the news, Silicon Valley Bank on the West Coast and Signature Bank on the East. We anticipated rates to go down, and guess what? The rates have gone down. Looking at the 30-year fixed, we are below 6.55. Looking at last Friday, March 24th, we were at 6.38%, and this is according to the Mortgage News Daily. So that is definitely something that is potentially in everyone's favor. I wanted to read a quote here from Nadia Evangelo. We've quoted Nadia before. Nadia is the Director of Real Estate Research at the National Association of Realtors. With rates below 6.5%, more Americans can purchase the median-priced home. If mortgage rates continue to move down, the housing market may rebound faster than expected. So we will certainly be watching the mortgage rates and see what the trends are as the spring market unfolds. Next chart here shows home ownership affordability year over year, and that has been declining, except we've been seeing some improvement here lately. We'll get to those details in just a second. I just want to mention that even with home prices not being slashed, with the rates being lower, that increases affordability for many prospective buyers out there. Whether you finally have enough to put down and or with the lower rates, monthly payments might make sense for you, especially when comparing to renting. We'll talk about that too in just a bit. Or thanks to the lower rates, you can afford the price point that you'd prefer to be in, because maybe what you could afford with the rates being a little bit higher, we'll be getting to how 0.25% can certainly make a big difference in where you are and what kind of purchasing power you have. But let's take a look at this chart. Going back to January 2021, we were still less than a year into the pandemic, and rates were very, very low at that time. Many households could more easily afford to purchase a home. Thereafter, the housing market saw a ton of volatility, and affordability became a much greater challenge for so many, and certainly a stress for many who were trying to purchase at that time. Looks like the worst chunk being in the middle of last year, 2022. But since November, we've been seeing improvement, and hopefully we'll continue to see improvement grow as we move throughout this year. Now, I'm certainly not saying that everything's all sprinkles and unicorns. We're certainly not where we want to be, or we would like to be, but this is absolutely an encouraging shift. That's something that we cannot deny at all whatsoever. So we'll see how the coming weeks play out and ultimately how the spring market shapes up, but we shall see. Now, looking at this next slide, we'll be taking a look at the Housing Affordability Index from 1990 through today. And to explain a little bit further, the higher the bar, the more affordable homes tend to be. And again, we are moving in the right direction, but still less than where we were leading up to that bubble that ended up bursting in 2008. Certainly things started happening earlier, like 2006 and whatnot. But you can see in that pocket of years after the bubble burst, 2009 through 2015, that's where distressed properties, short sales, foreclosures, bank-owned properties certainly dominated the market. And that's something I believe that, we as a society and certainly our governmental officials need to put some programs in place to help with housing affordability, getting builders back out there, and giving more people an opportunity to achieve that American dream, because sometimes the American dream seems less attainable these days. And looking at this next chart, we're going to dive deeper into the Housing Affordability Index. To make sense of this chart, if you look at the dotted line, this is what that line means. The buyer who makes the median income can afford the median priced home. Above the line, the higher the bar, the more affordable. Below the line, not as affordable. And this is showing January 2022 through January 2023. And again, certainly not where we'd like to be, but this is a good sign that we are heading in the right direction. And just for the sake of transparency, this chart is looking at a household who is making the median income and putting 20% down. So not everybody has 20% down. You don't need 20% down. That's something else that we covered in our videos recently, as well as our social media posts. There are other programs out there where you can have as low as, I actually even heard recently, 3%, but definitely 3.5%. 5, 10%, 20% is ideal. You don't have to worry about mortgage insurance, but that's not something that everyone has, and that's something that not everyone needs to have in order to purchase a property. It might still make sense for you, even without 20% down, to get into a property with the lowest amount necessary to put down, especially if you get yourself into a place where your mortgage is going to be less than your rent, giving you an opportunity to save money and build equity. So kind of save money and make money in the long run. And this next chart is showing monthly mortgage payments from January 2021 through January of this year, looking at median price homes at the national level and looking at how the 30-year fixed interest rate has fluctuated from January 2021 through January of this year. Certainly saw those monthly payments increasing for those who were getting themselves into a home last year. When rates started to go up just after the first quarter, kind of peaking in October, things started looking a little bit better, not much better, but started looking a little bit better in November, and certainly has been looking better since. Again, can't stress this enough. We're not trying to say that everything smells like roses right now, but things are trending in the right direction if you are looking to purchase. And this next slide stresses the importance of knowing what's happening in your local market, and that's what we're here for. Hello. We want to share with you information that's happening both nationally and globally, because we are impacted by the global markets, but more importantly, what's happening in our market locally here in Chicago. We do cover Chicago and the nearby burbs, so please keep that in mind, even though most of our market updates are covering just Chicago proper. But as you are watching and listening to the news, please keep in mind that this is typically you're watching housing information that is discussing things at the national level, not necessarily Illinois. But if you're breaking down the country's regions here in this chart, you can see where homes can be a little bit more affordable. The Midwest certainly being one of them, out west being the most expensive. And of course, this is just breaking the country down into regions. Every state's different, every city is different. Village, suburb, etc., etc., etc. Just trying to put things in perspective as to where, if you are considering a move to another state, or if you're thinking that things are just way too high, especially here in the Midwest, consider that home prices do fluctuate from region to region, state to state, etc., etc. Some of those states may have more advantages, even with home prices being higher. May have more advantages of living in those states, whether it's state income tax or overall cost of living. But as we always say here, always comes down to what your personal situation is. You need to see what makes sense for you. So if you are looking to relocate locally, or you're looking to buy something for the first time or buy something for the first time in a long time. Please get in touch with us. We can connect you with some awesome lenders to start that conversation toward achieving your goal to home ownership. And not going to lie to you, sometimes renting might make more sense for you. It just comes down to your needs and your goals. So we're not going to try and convince you to buy something when renting might make more sense for you, or just something that might make sense for you, but you're just not ready to do. Always your personal and individual choice. But we do want to make sure that you have the information you need to make the best choice possible. This next slide we're going to show you is looking at 2000 to 2023 mortgage payment to income ratio. Just to explain this one a little bit more, the National Association of Realtors recommends a homeowner keep their principal and interest ideally at less than 25% of their income. Today we've broken below that threshold and are striving toward certainly at least January 2021's 13.3%. You can take a look here going back to 2000 all the way through. That certainly has gone up and down. And we were above that threshold as recently as October 2022 and finally have broken through. Let's hope that continues, folks. More people should be owning. Overall, I think that's just a better option for most. So before we dive into the numbers, just to recap, the reality is things are certainly not that awesome and ideal. However, we are seeing promising data. So what are the opportunities that are out there for you? There's a good chance that you could afford something, whether it be a single family home or get your foot in the door of investing in yourself by purchasing a condo. And please, folks, we are realtors. We handle both sales and rentals, so we can see the market and where things shift and how they shift. Certainly saw it over the last few years throughout the pandemic. And as we come out of the pandemic, rental prices have gone up, not just in Chicago. Nearby burbs seems like they've gone up even more, at least in my own personal experience with listings that we've had and or clients that we've helped rent. And we aren't knocking renting because renting may make sense for you right now. But isn't it worth the conversation to see if home buying is an option for you and to see if that might make even more sense? Remember, we need to look ahead, not just at the now. And I know that's easy because life moves very, very quickly. And it's hard to plan ahead because there's so many unknowns. But let's take the information that we have. Let's look at things historically and how trends have played out and kind of take a look at all that data to help us make the best decision possible. We can't predict the future, but we can certainly project where things could be headed and project where we would like to be and plan on taking those steps to be where we want to be in the future. So now what you've all been waiting for, let's dive into those numbers. We're going to go from fun facts to quick facts and then unpack those numbers a little bit more. We're looking at information and data that's provided by the Chicago Association of Realtors. It is for the week ending March 18th, 2023, and current as of March 27th. Can't believe the month's gone already. Where does time fly, folks? So looking at year-over-year changes, new listings for the detached market down nearly 20%, attached being condos and townhomes down by 43.6%. Under contract, detached down by 18.4%, attached down by nearly 34%, and homes for sale detached up by 5.7%, down in the attached market by 30.3% year over year. Looking at new listings, the detached market, we wrapped up the week of March 18th with 291, bringing us to a 3-month average of 270, down by 11.7% year over year. Attached 496, 3-month average of 406, down by 35.7% year over year. Under contract wrapped up the week with 226 in the detached market. 3-month average of 159, single family attached, wrapped up with 357, 3-month average of 265 and down year over year by 35.7%. Inventory of homes for sale. We finished the week of March 18th with 2,182 homes, 3-month average of 2,398, up by 14.4% year over year, while the attached market finished with 3,018 properties and a 3-month average of 3,202, down by 24.2%. So there you have it, folks. That's our weekly market update for this week. We try and keep you informed as much as possible, no matter if the market's doing good or not. We want to make sure that you have the information and data to make the best decision possible for you and your household, not only now, but in the future. If you'd like a copy of this report or would like to have a conversation about the data that we've covered, or if you have a lot of other questions besides what we've covered, We'd love to talk. You can get in touch with us. Our contact information is below. Call, text, or email. We look forward to speaking with you and helping you make the best decision for you. Thanks again for watching. Take care of yourselves and each other, and we'll catch you next week.